Hello and welcome to Fouraye Education.
Hello.
Today we will be doing the analysis of the CVS Health stock. Today I'm joined by my friend Arda Mesci. So to start off, CVS is a company providing health services in the US. CVS Pharmacy distributes prescription drugs and drugs to customers. CVS Caremark is a pharmacy benefits manager, which is a really big business in terms of CVS. The history of CVS is that CVS was founded during the 1960s. In 1963, 63, CVS had its first store in Lowell, Massachusetts. In 1964, the chain grew to 17 stores. In 1967, they began to open stores with pharmacy departments. In 1969, CVS was sold to Melwell Corp. After that, CVS started to increase their store counts and eventually grew to today's size. The important executives in CVS are Karen S. Lynch, the CEO of CVS. She was born 30 December 1963 in Massachusetts. She attended Ware Junior Senior High and graduated in 1980. She then attended Carroll School of Management at Boston College, where she got her bachelor's degree in accounting and also got a CPA. She spent a decade in the insurance industry, after which she did her MBA. In 2004, she was appointed as the president at Cigna Dental. She left Cigna in 2009 to then become the president of Magellan Health Services. She then left in 2012 to join Aetna as an executive president. Executive vice president. In 2015, she became Aetna's president. At that time, CVS acquired $70 billion. She then became chief executive officer on 1st of February 2021.
Ryan Brennan is another executive of CVS. The chief medical officer of CVS. He went to Southern Methodist University for a Bachelor of Science. He has his Master of Science in Oxford University. He had his Master of Public and his Doctorate of Medicine in Yale Medical School. He got his doctorate in law from Yale Law School. He worked as a professor of medicine at Harvard Medical School for 15 years. He then worked at Brigham's and Women's Hospital for 14 years. He worked as a chief medical officer at Eton for 2 years, and he has worked at CVS as a chief medical officer since 2008.
Sean Gerton is the chief financial officer of CVS. He worked 8 years at Aetna, and he was the person in charge of the financial strategies. He was recognized as a top CFO by Institutional Investors magazine.
Financial performance of CVS in 2020. In 2020, CVS Health grew their total revenue by 4.6%, owing to robust growth in the healthcare benefits and retail businesses. CVS earns $5.47 per share in GAAP diluted earnings per share, with adjusting earnings per share of $7.5, which was above the high end of our expectation range. We are happy with our sustained progress in 2020, which will allow us to accelerate future growth and expand our integrated services by expanding on our foundation. Furthermore, our substantial cash flow creation has allowed us to deliver in accordance with our strategy. We repaid $4.25 billion in net long-term debt in 2020 and $12.2 billion since the Eton deal, which is projected to give us additional flexibility in delivering services, enhanced value to our stockholders. So now we will continue with the technical analysis part.
Also note that this is not financial advice.
Yeah, of course, the most important part. So in the daily chart, we can see a uptrend starting from the beginning of this year, and our stochastic RSI is low for now, and it might increase in the coming days. But before increasing, we expect a decrease to lower levels, and also we can see the support lines. It will touch the support line and take support and continue increasing. In the big chart, we can see a formation, cube formation. If it happens, we expect it to possibly go farther. So also MACD shows now it will decrease, but in the coming days, it can again go up. Okay, second technical analysis by FA.
So I think that the stock will decrease in price. If you look at Wyckoff, we could see that it shows that it will begin to decrease. Also in ADX DI, we could see that DI plus and DI minus could clash. And as we can see from previous clashings, the downtrend from the DI plus DI minus clash won't be too long. So there would only be a small fall. I would expect it to drop down to about $105.26, which is not a big drop. From what I can see is that the GAN box and the GAN fan are clashing together to create a support line, which the current price is bouncing between. A breakout could occur. I would expect an upward breakout. And we can also see that there was a cup formation before, and probably there will be a continuation of it, as my friend mentioned. So what we could expect from this stock is that it would go down for the short term to go down to not that low, but lower levels than now, around 105, maybe 104. And then we will see more increases, maybe more bounces, and then eventually a breakout, which I would expect to be in the upward direction.
Okay, so I think it's all for today's technical analysis, right?
Yeah, I think that's all for today. So to sum it up, what we think is that CVS is a great stock. It's relatively undervalued, and it should increase in price in the long term. In the short term, it would be a slow increase, but a stable increase. Also, CVS is going to pay their dividends in a close date, around 20 January or something, 22, I don't quite remember. But I think overall that CVS is a great performing stock, and it would be a great addition to any portfolio. However, this analysis is not a financial advice. So please be warned and make your own analysis before looking at our analysis. And that's all that is for today's analysis. Thank you for listening.
See you in the future videos.
Bye.